Look at this structural model of a standard enterprise system. These distinct geometric blocks represent isolated databases for inventory, human resources, and accounting. Moving data between them introduces a structural friction known as module latency. When an event occurs at the operational edge, like a product being scanned out of a warehouse, that data does not immediately reach the financial core. It waits in local storage, requiring a scheduled batch process or a manual synchronization to move to the next silo. Because these departments are operating on asynchronous timelines, massive discrepancies inevitably build up. Finance teams are forced into a continuous cycle of manual reconciliation, trying to match what the warehouse claims it shipped with what the accounting ledger actually reflects. The result is that traditional enterprise resource planning systems operate as reactive historical records. They tell you what your financial position was weeks ago, rather than functioning as a live engine of your current operations. The APS, or Advanced Program Solutions, framework discards this isolated structure entirely. It replaces silos with a cloud-based architecture called a neural business ecosystem. It operates on a strict mechanism called the domino effect. A single entry point triggers simultaneous updates across every relevant node in the network in a fraction of a second. Raw operational data is instantly processed, taxed, and written into fully reconciled GAAP and IFRS-compliant double-entry ledgers. Because reconciliation is happening continuously at the millisecond level, the ultimate outcome of this synchronization is extreme operational speed. A complete multinational fiscal year close can be executed in exactly 90 seconds. Achieving zero-latency accounting requires destroying the modular ERP structure from the ground up and rebuilding it as a unified pipeline where data is entered once. We track this pipeline's architecture by following a single edge input, like a physical barcode scan or a digital webhook payment. As it enters the system, it splits into distinct pathways, completely bypassing batch processing to cascade into inventory and tax nodes simultaneously. To maintain structural integrity at this speed, the APS inventory module enforces strict methodological constraints on the data it processes. The system entirely rejects traditional FIFO or LIFO accounting methods. Instead, it relies on a mandatory automated average cost model. Every time a new item is received or shipped, the system instantly recalculates the inventory valuation and the cost of goods sold based purely on this strict average. This absolute constraint is particularly critical when the data moves into the manufacturing layer, where the bill of materials engine takes over. During a production cycle, the bill of materials automatically distributes the calculated costs of raw materials and tracks waste precisely, moving those figures directly into the work-in-progress ledgers without any manual data entry from the floor staff. By locking these specific cost formulas into the architecture itself, the system prevents the massive valuation discrepancies that usually plague manufacturing companies at month-end. Establishing rigid, automated cost constraints at the exact point of data entry provides the non-negotiable mathematical foundation required for real-time ledger accuracy. Once the inventory costing is locked, the pipeline moves to generate automated daily journal entries for every recorded action. These entries are instantly balanced and formatted to maintain strict compliance with GAAP and IFRS standards, entirely removing the need for a human accountant to draft the initial entry. This zero-touch automation also extends laterally to the global HR node, an area fraught with high-risk legislative requirements. Before payroll processing, an automated wage protection system pre-check scans the data against 12 distinct checkpoints across 7 countries. Once cleared, the validated payroll figures merge seamlessly into the main double-entry general ledger. To capture precise labor costs, the system uses biometric independence at the operational edge. Supervisors log daily site attendance directly into the network, meaning individual workers do not need smartphones to record their presence. For project-based work, these recorded timesheets instantly convert billable hours into live client invoices. In a neural architecture, legal and financial compliance ceases to be a post-mortem audit. It acts as an automated gateway hard-coded directly into the data pipeline. The fourth architectural layer is the AI arsenal and compliance shield. This diagram shows how the system separates its machine learning capabilities, the translucent top layer, from the impenetrable SQL database beneath it. This separation allows the AI to perform continuous anomaly detection. It scans millions of transactions as they flow in, instantly flagging irregularities, like a sudden 20% spike in expenses or a duplicate supplier invoice. The layer also utilizes natural language processing. The AI assistant translates plain text questions into instant SQL queries, extracting data and building visual charts on demand. It can also execute live column translations of your reporting data into 26 different languages, completely independently of the core accounting data. For data entry, the AI optical character recognition captures an image of a physical receipt, extracts the supplier name, date, and amount, and drafts a journal entry. However, allowing an autonomous AI to write directly to a financial ledger introduces massive audit risks and threatens data integrity. To solve this, APS enforces a strict read-only constraint. The AI acts exclusively as an analytical guide and draft generator. It cannot post, modify, or delete a single ledger entry without an explicit human authorization click. To safely integrate machine learning into enterprise finance, the AI must be strictly contained as a read-only supervisor. It analyzes the data, but humans retain absolute control over the ledger. We can now look at the macro result of a year's worth of this continuous neural processing. Bank reconciliation occurs continuously, with the AI matching statements to the ledger within a 1% variance tolerance. This eliminates the traditional end-of-month scramble to align the books. With data already reconciled, the fiscal year close is a mechanical execution. Asset and inventory balances roll forward, while revenue and expense accounts clear, simultaneously in just 90 seconds. During this, the system generates a heavily protected audit trail of every automated action. This speed is supported by a progressive web auth infrastructure, accessible from any device, and secured by role-based access control that isolates corporate databases to prevent unauthorized data bleed. This 90-second close provides the mathematical proof of the continuous data synchronization running in the background all year. This architectural foundation provides the base for the 2026-2027 development roadmap. The system will integrate green accounting protocols, allowing the automated data pipeline to track and calculate corporate carbon footprints directly alongside financial costs. Blockchain technology will be implemented into the data pipeline to validate and guarantee the execution of smart contracts without third-party arbitration. And the edge input layer will expand to include augmented reality, using spatial mapping to rapidly scan physical warehouse shelves and execute visual inventory counts. Because the core network relies on real-time neural connections rather than rigid databases, it scales natively into decentralized and spatial computing environments. APS demonstrates that the future of enterprise finance lies in an intelligent, self-regulating ecosystem that manages a company's operations in real time.